Hello Mavericks, this is Imri and welcome to today's market roundup. It is Wednesday, October 18th. So we'll be going through a review of the trading day, taking a look at any meaningful news, broader equity market analysis, of course. We'll be taking a look at a few commodities. We'll then be doing some technical analysis on the major market indices, taking a look at the market internals, examining a sector heat map, and then finally we'll be taking a look at some trading setups. All right, let's get right into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's get into some market analysis. So it's been quite a busy day. The big news is that 30-year mortgage rates, fixed mortgage rates that is, have hit 8% for the first time since the year 2000. That's wild in and of itself, and consequently stocks have come down as the 10-year yield continues to march higher and higher. As far as the major stock market averages go, the Dow Jones down almost 1%, S&P down 1.34%, the Qs down 1.31%, the Russell down a little bit over 2%, oil slightly up on the day at 0.62%, and gold up a little bit over 1.3%. So commodities hanging in there, equities taking a bit of a hit there. And then as we can see from the advanced decline line, most issues were declining today, as well as most issues being below their 50-period moving average. So when we take a look at a price chart of the S&P 500, we had this nice little pop, right, towards the earlier periods of the month, and we're now kind of trading lower, yes, but trading somewhat sideways. We haven't broken above the 50-period moving average, but so far the 20-period moving average is holding on as support. Now, my Elliott wave analysis tells me that this little consolidation / minor setback is eventually going to be bought, and we should be breaking above 4,400. I'm personally keeping an eye on 4,500 as a potential resistance point. Now, in the Qs, it's a similar thing. You can see here from my Elliott wave labels that I've labeled this decline in the markets from late summer onwards as being, well, late summer, I guess from middle of July onwards, as being an ABC. In other words, that's a 3-wave corrective sequence. Now, the last time I did one of these updates, I said that I was looking for one more slight new low below 351.36 in the Qs to consider the ABC correction more satisfyingly complete from an Elliott wave analytical perspective. But at the time, I also said the S&P counts complete. Well, what happened was we never got that new lower low in the Qs, and we've started rallying ever since. So I see the pattern in the Qs as being very similar in the S&P, that we should be finding support. I would assume sometime in early tomorrow trading. So I am leaning a little bullish here in the market, despite today being a down day. And especially despite today being a pretty ugly heat map. So we can see that energy has held up pretty well, and defensive sectors have held up pretty well as well. Like P&G, Pepsi, all doing pretty well. The stuff that hasn't done well is obviously the growth stuff, consumer cyclical, that discretionary kind of stocks. Financials have taken a hit as well, as you would expect on these rising yields. Big news is what's going on with Bank of America. That is a fascinating story in my opinion, but it is, it's one that we should be paying attention to, especially as yields are rising for sure. But in the grand scheme of things, I just wonder whether or not that's a narrative that the market's going to be paying particular attention to, over the long term. I saw on Twitter, I guess on X as it's called now, that losses, the losses in the bond portfolio are staggering. They have a $760 billion bond portfolio, I believe, and those losses have risen by 24% in the quarter to $131.6 billion. And those losses have dwarfed the bank's $7.8 billion in quarterly earnings. It is an existential threat to the bank. but there are emergency lending facilities available. I don't think any of the authorities want to see another major bank failure. So I wonder if someone is going to come to the rescue. And then the question is how's the market going to see that event? Assuming that does happen, are they going to see a rescue as a bullish sign, or are they going to see it as a bearish sign that a giant like Bank of America needs a bailout? So it remains to be seen how that's going to play out. But from what I see in the financial sector as a whole, I still see a little bit of a bumpy ride ahead before things can get better. Anyway, the weekly outlook, I'm kind of cheating here. I've got the slider between a 0 and a +1. Things seem fairly neutral, but like I said, I'm personally leaning a little more bullish. Monthly outlook remains a +2. Not much has changed on the monthly chart there. So in terms of some potential bullish trades, I know Caterpillar had a big down day today, as did AMD and Nvidia, but I think these are pullbacks in what are overall larger bullish trends in all three of those names. I've got PCBX and MRK as neutral trades, and then potential bearish trades, I've got CSX and JPM. Okay, so here's a chart of AMD with Elliott wave labels on it. So long story short, I think we got an end to a corrective sell-off, not all that long ago in AMD. So what that effectively means is that if we look at this corrective decline that started back in June, really, June 12th, my Elliott wave analysis presumes that it ended, not all that long ago, September 25th. So a little under a month ago, and we've been putting in a nice rally ever since, and we've given some of that back over the last few days. Now, you can see here from the Fibonacci levels that we're on the 50% retracement level right here, and I'm expecting us to find a base somewhere between the 50% and the 78.6%. So I am allowing scope for lower, but ultimately, I do believe this is a buying opportunity should the right buying trigger materialize. I'm not saying buy blindly just because we're reaching those retracement levels, but they are areas of potential support where I am looking for a bullish trigger. Okay, now here is a bit more of a sideways trade in Merck & Co. You can see here we're in a clear range. I don't see this range necessarily breaking either lower or higher anytime soon. Although now that we're near the lower end of the range, it'll be curious to see if we attack that support one more time, just below $102, and whether or not we're going to break below it. But whenever we're in a range, my general rule is that the lower you are in the range, the more the risk is skewed to the upside, and the higher you are in the range, the more the risk is skewed to the downside. So I broadly see the stock trading sideways for quite some time, but in a fairly wide range, right, between roughly 101 and 118. So many ways to play that. I personally don't like playing sideways price action. I'm much more directional. Again, that's because I'm coming from the currency side of the division where we do have to take a directional stance on currencies, and that carries over into how I trade options as well. And then finally, we've got a bearish setup here in JPM. This looks ugly to me. Looks like we had a nice decline down. We had a fake out popping above all three moving averages. And now here's the bearish trigger level for me. And I realize it's a few dollars below where we are right now, but I'd say keep a very close eye on 140.83. It's the last time we bounced right above the 200 period moving average. But to me, that's a key level. If we break below that, I'm not going to be shocked if we make new lows below 124, which is where we bounced in late March, right? So I potentially see some significant downside ahead here that dovetails nicely with what I said earlier about being generally a little bit more bearish on the financial sector right now. I still see some pain ahead in that sector before things can rebound. So tomorrow's outlook, risk-off sentiment, but I am seeing signs of bottoming here. We'll see if that actually plays out. Economic reports tomorrow, we've got unemployment claims, definitely a market-moving event, followed by some comments by Mr. Powell. Earnings report, we've got PM, UNP, BX, and AT&T all happening tomorrow. So keep an eye on those earnings reports if you want some volatility catalysts to play as well. All right, traders, that is it for me. Thank you for watching. I will see you guys next time. Bye for now.